So I'm actually shorting the market up here. I am shorting the market up here. There's some interesting things showing up in the charts, and I just wanted to point out this thing to you guys, is that if you go back to the dot-com bubble, the market fell 41% initially and then rallied back 41% before the bigger rollover that took us down 72%. If you go back to, let's say, the Great Depression, the market dumped out 52%, rallied back 50% before dumping out another 70, 80%. A couple other things to note here. If you look at the NASDAQ, guess where it is? Dropped 38% from the all-time highs of 2021. It has now rallied 37%. So these are the types of things as a technician that I'm looking at, and it makes me kind of get in that position of saying we're probably closer to the end of this bull run than not.
Hey guys, welcome back to Library of Wealth. Veteran trader Gareth Soloway gives us his market outlook and prediction for Bitcoin and why he's now shifted to shorting the market. Soloway highlights an interesting phenomenon observed during altcoin seasons where the collective expectation of a rally leads to a surge in buying activity. However, when the anticipated price increase fails to materialize, despite widespread optimism, it signals a lack of investor participation, resulting in a stagnant market. Recently, Soloway has been exercising caution in his trading activities, particularly during a period when cryptocurrency prices have become oversold. In such scenarios, he strategically employs dollar cost averaging down into negative positions. This approach allows him to lower the average entry price and potentially increase profits when a bounce occurs. Soloway emphasizes that the upcoming altcoin season will likely be directly influenced by regulatory uncertainties prevailing in the crypto market, thereby setting the stage for a turbulent second half of 2023. Before we dive in, don't forget to hit the like button and subscribe if you enjoy the content we do here on this channel.
We haven't seen any change in the economic outlook overall. If anything, the Fed has been a little bit more hawkish after yesterday's meeting, and you've seen multiple expansion. It's no one's saying, hey, we're going to go back to this robust growth in the economy. It's more like, yeah, we still may get a slowdown, maybe it'll be a soft landing, but they're not talking about us ripping in terms of economic growth. And so this has really been a multiple expansion. To me, I think the crypto story plays into it. I think crypto used to be where a lot of retail investors were playing, and now that's dead money. So that's bringing money and chasing names like Nvidia and Tesla and all of these type of things. And then ultimately it's kind of a chase for returns. I mean, you have fund managers that are saying, hey, listen, we got to be in this to get it. You have the AI story and all that stuff, and it is drawing a lot of money in. The question is, at what point do valuations get so rich that you then start to see the reversal? When we talked last, Bitcoin was at 30,000 and change. I said, all right, that's going to pull back. I also expected the overall asset markets to pull back as well. The asset markets haven't. We haven't seen the stock market pull back whatsoever. And you're right. I think Microsoft today hit a new all-time high, or at least touched double top. We've seen Apple make a new all-time high. So there's no doubt I've been early on that trade. But I still do believe that the market, again, is not factoring in what the rise in interest rates on such a enormous a level will mean to the overall economy. I think it's a lagging indicator, and I still expect us to be in recession by year end. Seems like, Bitcoin, because of the regulation, the altcoins especially, they're in this kind of no man's land now where they're not a risk asset, so they're not going up with the stock market. But at the same time, if you hear any sort of negatives about risk assets, there's no safety hedge within there because the SEC put their foot down and kind of basically said, hey, these are almost all securities, and we're now going to sue all of these exchanges. So to me, ultimately, I'm a huge long-term bull on Bitcoin, but I think that, again, at some point, Bitcoin still has another leg lower. I'm not even convinced that the 15,700 level is a low on Bitcoin just yet. Now, when it comes to the stock market, I do think, again, we will see some sort of rollover mirroring past big cycles. How low we go, that's the tougher question. And again, even I'm kind of questioning the overall thesis there of what's going to be the trigger to kick us off to the downside. So the way I'm handling it is just slowly inching into these positions. And I'm talking about like Tesla. Tesla up here has had a monster run. I think it was up 13 straight days until it had a small down day yesterday. That was a 50% retrace. And again, I look at these Fibonacci retrace levels, things like that, where you're coming and using the technicals to pinpoint. So you see the stocks extended, but we know stocks can remain extended for long periods of time. So you want other factors. In this case, Tesla has a 50% retrace from the all-time high to the lows where it was around that 100 100 marker. And then you take into account other names like NVIDIA, which for me, I look at it and I say, okay, the AI story is a great story. So was the dot-com story back in the late 90s, but we know that you had a flush out first. And so I'm kind of in the camp that things have gotten a little too far ahead of themselves with the AI story, and it's been a chase for the name. And I do think you'll be looking for pullbacks there. So kind of the bigger beta plays, the bigger ones that have bigger moves, those are the ones I'm slowly inching in on the short side on. I still think that we'll find ourselves in a recession. I think the Fed made themselves very clear yesterday that they're not going to be hiking, or I should say lowering rates for a substantial amount of time. So even if they, let's say the jobs numbers weaken and we don't see them raise 2 more times, like I think 66% of the panel said they would, then you still are looking at a situation where they're not cutting rates for a long time. So this market better be prepared for high interest rates for a long period of time. I'm in the camp, though, that how does it continue? I mean, I'm trying to figure out the bull case for housing, for residential housing even. You have interest rates now at 7% for a 30-year mortgage. If we do see a climb up in unemployment, you're going to have people that already are struggling to afford a mortgage, and then people are going to start losing jobs. And I think one of the things that people are not talking about enough, the jobless claims this morning. So last week, it was the biggest jump since 2021 to 266,000 people filing for unemployment. Today, I was saying to myself, okay, was that an outlier or was that the new norm? And today we got 262,000, which is just 4,000 from last number. So now we're starting to see something that you could almost say is maybe a trend of more people filing for unemployment, which could spell the end of this kind of great market for jobs that we've been seeing that's been holding up the market for so long.
Soloway points out a notable development in the cryptocurrency space, where stablecoins now represent a substantial 18% of the entire market. However, the prevailing sentiment appears to be predominantly bearish, as investors adopt a cautious stance, eagerly awaiting the unfolding events of the upcoming weeks. The ongoing legal battles waged by the SEC against prominent players like Binance and Coinbase further contribute to this cautious atmosphere, potentially paving the way for a significant correction sooner than anticipated by many. By drawing parallels to Bitcoin's historical patterns observed in 2013 and 2018, Soloway anticipates a notable market rebound following potential rate cuts implemented by the Federal Reserve. Given the prevailing level of uncertainty, he acknowledges that 2023 has been characterized by turbulent and volatile phases, which sets the stage for the unfolding trajectory of the crypto market. Soloway suggests that there is a general lack of understanding about how the economy could naturally recover from a recession, as investors have become so reliant on the Fed's interventions. He does see signs of trouble in the economy, such as skyrocketing credit card debt and car loan defaults. He predicts that these issues will lead to a recession in the second half of 2023, which he believes will be long and drawn out. What do you think about Gareth Soloway's prediction for Bitcoin and the crypto market in the coming weeks? Comment down below. Thanks so much for watching. Don't forget to like and subscribe. This is the Library of Wealth. We'll see you in the next video.